Paramount Skydance just shocked the market. The stock exploded 20% in one day, and the reason is something nobody expected. They beat Netflix. Yes, Netflix walked away from the deal. Paramount stepped in, and Wall Street hit the buy button. This surprised Wall Street, because for months everyone thought Netflix would win the bidding war for Warner Bros. Discovery. But at the last moment, Netflix said the price was too high. Paramount raised the offer, all cash, serious backing, and suddenly they were the winner. The market saw that and said this company is not playing small anymore. Now pay attention to this. This is not just another media deal. If this merger goes through, Paramount gets HBO, CNN, and Warner Brothers Studios. That is a massive content library. Movies, series, news, streaming power. This turns Paramount into a real competitor against Netflix, Disney, and Amazon. And investors love scale, because in streaming, scale equals survival. But there is another reason the stock jumped. The money behind the deal. This is not a weak, debt-heavy acquisition. There is a huge equity commitment backed by Larry Ellison's trust. That tells investors the financing risk is low. The deal has real muscle behind it, and that reduces one of the biggest fears in big mergers. Then came the synergy story. Management is talking about $3 billion in cost savings and growth from combining both companies. And whenever Wall Street hears $3 billion in synergies, stocks move, because that means higher profits in the future. And higher profits mean higher valuations, but that's not all. They also announced a dividend, small, but powerful as a signal. It tells the market we are confident in cash flow. We can grow and still return money to shareholders. That brings in income investors and long-term funds, more buyers, more momentum, and that is exactly what we saw today. Here's what could happen next. In the bullish scenario, the merger gets approved, the content libraries combine, streaming scale improves, cost savings kick in, and this stock could re-rate higher as a media superpower. That would mean today's 20% move is just the beginning. But there is a real risk. Regulators. This is a huge consolidation of media power. Studios, streaming, news networks, all under one roof. That will attract antitrust scrutiny. If regulators delay the deal, the stock could become very volatile. If they block it, some of today's gains could disappear fast. So this becomes a classic merger trade. High upside if approved, high volatility until a decision. For retail investors, this is not just about hype. This is about execution. Winning the bidding war is step one. Integrating two massive companies is step two. And that is where many mergers fail. So watch three things going forward. Regulatory headlines, synergy updates, and streaming subscriber growth. Those will control the next big move. Because if this company actually delivers on scale and profitability, Wall Street will start valuing it very differently. But if costs explode or approvals get messy, momentum traders will exit fast. So here is the big question. Did Paramount Skydance just create the next media giant that can challenge Netflix and Disney? Or did it overpay at the worst possible time? Are you buying this breakout, waiting for a pullback, or staying out until regulators decide? Comment your strategy below, bullish or bearish. And in the next video, I will break down the smartest trade setups.